Hi friends, Simit here from InformedTrades.com. Today is Tuesday, July 22nd, 2014. Time for our daily Forex chart review. Basically, in these sessions each day I share the trades I'm placing, adjustments to existing positions that I have on in the markets. All as a part of helping traders learn. You can learn from my mistakes, learn from my successes. All my trades are verified through my FX book. These are live trades placed on real accounts. You can see my trading blog there for the verification, for the whole track record historically going back 9 years. And of course, if any of the information I'm presenting is unfamiliar to you, check out InformedTrades. We have a huge archive of learning material, all designed to help traders learn. Okay, let's get started with a look at the charts. Okay, on the screen right now is Pound Canada. We'll get to that in a moment. Let's start, as we usually do, with gold. There was a Malaysian airline crash, and we'll talk about that a bit later. I'll probably do a little video on that a little bit later. But that seems to at least be holding gold somewhat steady. So gold hasn't broken out of the range yet. The market isn't really reacting significantly one way or the other to that news, although it may in the future. So something to keep in the back of our minds. Technically, the situation is basically the same as it has been, for months. For months we see the range as the rectangle here. Going back to March 7th, depending on how you look at it, you might say it's a little bit later. But basically 1270 to 1330, that's the range we're in. The near-term range, or the range within that range, is 1310 to 1330. We are at the 200 exponential moving average. Price has been flirting with that level the past three trading sessions, excuse me. That's sort of where we're at. If we close below that, the next stop is the 50-cent moving average at 1290, and then 1280 major support level. To me, nothing really significant, or this is all the same. I'm looking at this from a long-term perspective. I think gold, because of the debt crisis that every major economy has in the world, as well as many of the smaller economies as well, I think gold's going to go much higher. I think we're going to see a new international monetary agreement. We talked a lot about this on InformedTrades, but from this perspective, gold's going to go well beyond its 2011 highs. And if that's your viewpoint and you want to accumulate for the long term, I think now is a reasonable price to do so. The one big caveat is that if we close all the way below 1180, which is the lows of 2014, then I would be concerned. But so long as we're above 1180, I think the bullish case is still intact. Okay, Bitcoin. A little bit of a rally. We're still, basically right at the 50-cent moving average. That's clearly acting as support. As I've noted, so long as Bitcoin stays above the 50-cent moving average and above point C, which is above the 50-cent moving average, or which is below the 50-cent moving average, I think the trend is bullish, and I think that the target to keep in mind is 680. I'm viewing this, like I mentioned before, like I mentioned every time I mention Bitcoin, I'm viewing this as an educated lottery ticket. I only have a small position. If Bitcoin goes to zero, that's obviously not preferred from my speculative viewpoint, but I can handle it because the position is small enough. On the flip side, I am looking for a much larger gain, so I may be willing to hold it, or maybe I may need to hold this for several years, perhaps longer, because I'm playing for a 10-to-1 gain here. Sort of like the way I view a small cap stock. In the near term, though, speaking from a strictly technical perspective, price is above the 50-cent moving average, above point C on the ABCD pattern here. So I think the trend is bullish. It needs to stay. We have been close with this 50-cent moving average, so that's something to watch in the near term if price stays above that. Okay. Now let's start with the Forex trades, which of course I'm trading a bit more actively. Let's start with the bad news, which is Aussie Kiwi, which is perhaps a little embarrassing, but you live and learn, and it's part of trading, so I don't necessarily think I did anything wrong. Of course, it was a mistake. Yesterday I said that Aussie Kiwi was the perfect setup, and of course today I get stopped out on that trade, but I think it still was a very good setup because we had a 50% pullback from a swing high here to a swing low. We're clearly in a downtrend. Price is below the 50-cent moving average, which in turn is below the 200 exponential moving average. Price was at not only a 50-cent moving average, which was also a 50% retracement level, but that coincided with a horizontal support level right here. And that was most recently established July 2nd. And on top of all that, we had a doji candle right there. So I think we had a lot of signs that were favorable. Now today, price just rallied and broke through that, rallied strongly. took out my stop. That happens. No method is 100%. You look for those multiple factors to put the odds more in your favor to create the probability even more so to your advantage. But in this particular instance, it didn't work out. I don't think that means it's a bad trade. I think it just means it didn't work out. Something going forward, you're always thinking about how you can improve. In this particular instance, I don't really see, like I mentioned, I really do think it was a perfect setup. I don't really see what I could have done better. If I had to place a trade again, I probably still would. But it's something to bear in mind. I'll be looking at all these factors, and as you look through these charts, you go through your daily routine, you get the hang of it, and you continue to improve it as part of the fun of trading, constantly being improving. The fun and the challenge. So that's Aussie Kiwi. Started out with a loss there. Of course, losing is never fun, but it's the cost of finding winners. Pound Canada. Now, I was seeing, last week we were seeing a fair amount of strength in the Canadian dollar, which means short Pound Canada. But I'm starting to see that reverse. I'm seeing more signs of weakness in the Canadian dollar, specifically against Aussie Canada, New Zealand Canada. Those trades or those pairs actually, those currencies actually look like it would be worth going long New Zealand Canada or long Aussie Canada, which implies a short Canada position. So here, the position was in my favor. I had de-risked the trade. I moved to break even. And yesterday, and then it ran the 50 simple moving average. Yesterday's session was a doji. So this doji running in the 50 simple moving average and stalling there, plus the signs of weakness that I'm seeing in the Canadian dollar on other pairs, led me to close this out prematurely. So I took a small profit here that almost, not quite, but it almost makes up for the loss on that I took on Aussie Kiwi. So that's not necessarily a valid reason. You don't, as soon as you lose, you don't want to close out any winners prematurely just to make up for the loss. But when you have a valid reason, which I thought this was, then that's good. And definitely, obviously risk mitigation, minimizing risk is the name of the game. We want to minimize our drawdown. Once you're in a drawdown, then you have to fight your way back up. You're only able to put on smaller positions. It's a harder battle. It's best to just avoid the drawdown if possible. So a small win here on Pound Canada. Not that great, but it does cover, like I mentioned, most of the loss on Aussie Kiwi, which is good. Okay, so that's Pound Canada. Now let's go to the yen pairs. And I'm really seeing yen weakness everywhere. I've mentioned this the past couple trading sessions. That's all I'm seeing. I put on another yen trade today, which we'll get to in a moment. Canada yen. Now this is actually, I mentioned that I was seeing weakness in the Canadian dollar on against the Australian dollar and against the New Zealand dollar. However, the Canadian dollar still looks to me strong against the Japanese yen. And I think that's not so much a reflection of the merits of the Canadian dollar at this particular time, but rather a reflection of the weakness in the Japanese yen at this time. So this position is slightly in the money, came very close to hitting my stop a couple days ago, but it's rallied since. We're now above the 50 simple moving average, above the 200 exponential moving average, above the 50% retracement level, and above the support level that I entered at. So all signs are positive yet. Not quite time to de-risk. That will come at 94.86. You can see that on the orange line here. If price closes at or above 94.86, I'll move my stop from here to here. But so far, a small floating profit on Canada yen. That's nice. Aussie yen, much bigger floating profit. Still, this trade has been de-risked, which isn't reflected here. But we closed above that orange line, so I can move my stop to my entry point. Make sure to save this. And now it's just a matter of waiting. Hopefully we get to the profit target here, 96.45. I think that we're seeing, in light of the yen weakness, I'm seeing everywhere. That still seems very reasonable target to me. Perhaps even there's a chance to go even further, but we'll see. First, let's get to 96.45 if we can. So far, so good on Aussie yen. This trade has been de-risked. Kiwi dollar. Okay, so this trade is basically at break-even. It might actually be a little below break-even. Let me quickly check my trading account. Yes, this position is slightly out of the money, basically at break-even, just a little bit below, a few pips below, right here. I still think it's fine. You know, we still have the prices responding to the 50 simple moving average, which is acting as another support level, in addition to this support level here that illustrated by the black line, which was established on June 25th, and again, or previously as resistance on May 14th and early April, April 1st. So I still think this is okay. I think the support levels here are formidable. Price is above the 50 simple moving average and the 200 exponential moving average. The trend is upwards. So this is just a matter of waiting. Trade hasn't been de-risked yet. Let's see if we can get above, at or above 87.21 before we can de-risk the trade. So just sitting and waiting on Kiwi dollar. However, today I added a Kiwi yen trade, and let's see if we can get to that. Okay. So here we're at this black line here is a support level of sorts. You can see it was tested a little bit here. Price spiked through it here. If we look at the 4-hour chart, it becomes a little clearer. Yeah, right here. So I was a little reluctant to put the entry order at 87.47. I didn't think price would come back down here. I zoomed into the 4-hour to really find this the near-term support level, and that's right here. Price has been filled. Had a big down candle on the current 4-hour bar, so we're slightly below the entry point. A small floating loss there. But the rationale here is basically the same as we're seeing on all the other yen trades that I have on. You know, price is at the 50 simple moving average, which is at a support level. And the support level also goes back to here, March 7th. It pulled back to the 50 simple moving average, 50% retracement. We're in an uptrend. Time to go long. Candlesticks. Today's candlestick looks a bit like a doji pattern, so we are consolidating a bit here. I'm set to go long at 88, or I did go long. The order is now filled. Stop is at 87.35, just below point C here, this recent swing low, which I think is a good way to put it. You know, you want to put your stop at where you think the trade is proven wrong, where the idea is proven wrong. Right now, the idea is that we're a pullback in an uptrend, and that point C should be the swing low. If we break below point C, then that idea is wrong, and we may be in for a bear trend. And this is not a pullback in an uptrend, but an actual bear trend. Okay, so that's basically it. Stop at 87.35, just below the swing low. Target profit is off the chart. I used an AB equals CD pattern here. So basically we had a 54% pullback and going higher. You know, the target profit is 90.50 or so. So that gives us a reward to risk of about 3.84. And this fits into the larger theme of just, you know, I'm seeing yen weakness everywhere, good yen setups to short the yen. So I think it's worth taking. And that's sort of it for the trades that I have on today. Right now I have 4 live trades on, 2 of which have been de-risked, 2 of which are still floating. In today's order, you know, added a long Kiwi yen, closed out my pound Canada, and actually, I'm sorry, there's 4 trades on, only my Aussie yen position has been de-risked. The other 3 have not been de-risked, so if my stop gets hit, I'll lose money on 3 out of the 4 trades. I'm risking 0.25% per trade, so my account balance would fall 0.75%. I don't want to risk more than, or lose more than 1% of my account balance at any given time. So if all my stops get hit, I don't want it to fall more than 1%. So I'm near my risk capacity here. So that's something to bear in mind. You know, in terms of tomorrow's session, when we're reviewing the markets, I only have room for 1 more trade, assuming I'm not able to de-risk trades before then. And just to recap in today's session, put a long order on Kiwi yen that has gotten filled. I closed out my pound Canada trade for a small profit, and my Aussie Kiwi trade got hit for a small loss as well. That's about it for today's trading. I have this trade documented on my blog on InformedTrades.com. Check it out. Ask questions, share your knowledge. Best of luck in your trading, and we'll see you tomorrow. Take care.